London stocks rose in early trade on Thursday as investors eyed the latest policy announcement from the Bank of England. At 08:30 BST, the FTSE 100 was up 0.4% to 7,658.78, while the pound was down 0.1% against the euro at 1.1376 and 0.2% lower versus the dollar at 1.3144 ahead of the BoE rate announcement at 1200 BST. The bank is expected to keep interest rates at 0.5%, with a 7-2 split just like in May, but it could start to guide the market towards a move later in the year. Lee Wild, head of equities strategy at Interactive Investor, said the BoE meeting is a non-event. There's no way the MPC will raise interest rates at lunchtime, and even August is looking doubtful now. Hot money's shifting to a November hike, or even later. Alongside receding inflation concerns, political mismanagement of the Brexit process and dollar buying, it's no wonder sterling remains glued to a 7-month low. That may change if Donald Trump continues his game of brinkmanship with the Chinese over trade tariffs. It's a dangerous policy not just for China and the US, but for Europe, Canada and America's other trading partners. There's still a good chance this is just more Trump chest-beating and not a situation that will spiral out of control, which explains why we are seeing buying on any dips in equity markets. Meanwhile, Owanda analyst Craig Lamb argued that there hasn't been sufficient evidence yet that the downturn in the first quarter was a blip. The recent retail sales data was encouraging and there has been some improvement in the PMI surveys, which provides hope, but I'm not convinced that will be enough. Lamb added that with Brexit negotiations at such a critical stage, it would be an odd time to be hiking interest rates. Later in the year, when we have more clarity, would surely be more suitable. Miners were the standout gainers, with Rio Tinto's Glencore, Antofagasta and Anglo American all higher. Dixon's Carphone was on the front foot, as its final results filled in the gaps after it announced the key points of a disappointing year in a recent profit warning. For the 12 months to the 28th of April, revenue increased of £10.5 billion was up 3% on the previous year, with like-for-like sales up 4%, but profit before tax falling 24% to £382 million. Over 50's specialist Saga was also higher after saying it traded in line with expectations in the first 4 months of its financial year as it wrote more motor and home insurance policies. Shire gained after saying it has secured approval from the U.S. Food HICL Infrastructure ticked up as it announced that it was part of a consortium with a subsidiary of Mitsubishi Corporation that has been selected by Ofgem as the preferred bidder to own and operate the offshore transmission link to the Racebank offshore wind farm project. As is usual on a Thursday, ex-dividend stocks were shaving some points off the FTSE 350, with United Utilities, Big Yellow, Tate. On the broker note front, Crest Nicholson was initiated at buy at Liberum, while Rio Tinto was lifted to buy by HSBC and Virgin Money was cut to neutral at JP Morgan. 3,853.00p minus 1.03%, WPP 1,211.25p minus 0.96%, Sainsbury, JSBRY 315.30p minus 0.47%, Experian, EXPN 1,859.00p minus 0.46%, Marks. BOF 329.00p 1.23%, FTSE 250 Fallers Big Yellow Group BYG 929.50p minus 2.16%, 8. PFC 543.78p minus 0.63%, RDI Right RDI 35.10p minus 0.57%.